Have you discovered the secret to trading? Because 30 years ago, when I started trading, I had no idea what the secret was or what trading was all about. I got into trading believing that you can take charts and you can somehow make money out of the squiggly lines. And that's probably why you got into trading as well, because somebody told you that you can take $100, turn it into $1 million by simply trading some squiggly lines on a bunch of little charts. But that's not true. I actually discovered the secret to trading, and I'm going to let you into the secret of trading after I've taken you to the charts and showing you a system and a strategy that you can use to become a profitable trader. So we're going to go to the charts now. I'm going to show you the strategy that we use on price action, the support and resistance, and how you can become a profitable trader simply by using that system. But people that know me and people that have seen my videos in the past will understand this one thing about me. And the one thing about me is I always tell you that trading is a 50-50 game. Trading is not about a win rate. I'm not interested in your win rate. I don't care what your win rate is. Your win rate is absolutely meaningless to me. I'm not interested in what win rate you've got or how many trades you win, because you can win 10 trades in a row at 10 bucks a win and then lose one trade for 1,000 and basically you're making a loss. So really all I'm interested in is how profitable you are as a trader. How much money can you make? Are you able to make a profit? Win rates are just something that you can boast about. See, when you're trading, when you understand the secret to trading, which I'm going to give you, then you'll understand why it's important not to worry about your win rate, but rather to worry about how much profit you're making and how to make money in the stock market. Guys, trading is risky. 80% of traders do lose money. In fact, on the 5-minute charts, 99% of traders do lose money. So if you don't like losing money and you don't like risk, this probably isn't for you, and you probably shouldn't be trading. Rather go and do accounting or something else. But if you are in the game and you do love trading, and it is something that you're becoming addicted to, because everyone becomes addicted to trading, everyone loves trading, then you're in the right place. Because then I can show you the secret, and I can show you the strategy, and I can show you how to trade with support and resistance and price action as we go. So we're going to do it to the charts and do that in a moment. Don't forget, drop down to the description, get your free Forex book. It's there for you. It's a PDF. And also, I put out trade of the day every single day. Just an idea. It's not trading advice, just for fun. And for the members that join, actually you get a video every morning about markets, and you also get the trades that are available and what's going up and what's going down and so many other perks as well. But that's on YouTube. It's a membership join. Just go and hit the join button. So guys, let's go to the charts and let's go and have a look at how you can trade with support and resistance, how you can actually trade and become a profitable trader, how you can get that so-called win rate that you actually want, that people say you can get, and then we'll take it from there. There are 3 ways that we trade in the markets, whether it be Forex, futures, spread betting, it doesn't matter. CFDs, normal equities, doesn't really matter. There's 3 ways that you trade in the stock market, and those 3 ways are as follows. We trade with a trend, whether it be up or down, and that trend will be your structure in the market. So trend is structure. So for example, this is up, then it comes down, then it goes up, then it comes down, then it goes up. So you trade in that trend. The trend is basically a line in the sand that says, I'm going in that direction, and every time it hits that resistance or support, that's in your trend. So that's the first way that we trade. The second way that we trade is in a range. Now, a good example of a range is the FTSE. So this is trading in a range. How do you trade in a range? Every time it hits the support, it goes up to the resistance. Every time it hits the resistance, it goes down to the support. Every time it goes back and forward, back and forward. That's a range. So you're trading in a range. So you're trading off the tops and the lows. And ranges are probably one of your best trades, because ranges tend to settle in and stay there, and they become very handy places to make money from. Ranges are great for trading in. And then the third way that we trade is with an overbought or an oversold signal. You don't need little squiggly lines at the bottom, guys, to tell you, like stochastics or MACDs or RSIs, relative strength, to tell you when a market is overbought or oversold. Surely you can see this with your own eyes. Look at this lamp pole formation. It's gone straight up, and that's right at the top. And for me, that looks overbought. You don't want to get the supermarket mentality of, oh, it's expensive. That doesn't work like that in the market. If something is overpriced in the market, it means it's really good. and it's probably worth buying. It's completely different to the supermarket where you see something that's overpriced and you think, oh, that's too expensive, I'll wait for it to get cheaper. It doesn't work like that. But what you do is you see something that's overbought. And now you think, no, I should actually go short on this because it's overbought. The point is, for you to go short on a trade like this, it has to break its structure. And its structure is effectively that. And that has now broken its structure. But I wouldn't go short on this particular trade because it will come down, and it'll come down to this level here, and it'll turn around and go back up, because that was resistance that it broke through, and now it's become support. Now, how do we get these support and resistance levels? Well, it's pretty straightforward, really. If you go and look at any product, for example, we can go and take a gold, we can go and take a Brent crude. A Brent crude would actually be quite a good example right now to show you guys what we do is we simply take the levels to the day chart and then we put it on a line chart. And the reason we put it on a line chart, guys, is as simple as this. The day chart firstly gives you most reliable levels. They give you good, reliable levels that you can work with. The line chart gives you closing prices. The candle chart gives you highs and lows. You don't want to work these lines off highs and lows. You want to work them off closing prices. So what you do is you put it to the line chart and you look for the areas where the price keeps ending and coming back, ending, coming back, ending, coming back. Now that is your resistance. That's an area that the price likes to get to and then come back. Support, same thing. You wait for it to get down. You see where the price likes to turn around and go back, turn around and go back. You look for those levels and you put your support in. The more times that it hits that area, the more chance it has got of breaking through those areas. So be aware of that. But obviously, if it keeps hitting it rather frequently, then you know it's a very good area where you can take your trades, because you know that that's resistance, that's support. And then you simply put it back to the candle charts, and then we take it back, because we're trading on the 4-hour chart, we take it back to the 4-hour chart. Now you've got your daily levels. But with having your daily levels, for example, this is an oil chart, you can look for other things in the market. For example, on the 4-hour chart, there's a supply of money here. A supply of money is an area where there's a lot of orders waiting. So what that means, and a supply is worked out by 3 large candles going in that direction. So this is short. So there's 3 short candles going down, sharp, strong candles. Says there's money lying here, and what that means is the price will go back, take that money, and then go down. That's how it works. Same, you've got fair value gaps here as well. Fair value gap, you want to go and look at my previous videos on fair value gaps. I'll explain to you what a fair value gap is. This entire area is a fair value gap. So effectively, there's loads of money lying here. What you've got to do, guys, is take these charts and stop looking at them as charts and start looking at them as buyers and sellers in the market. So what have we got here? We've got a big red candle. What does that tell you? There's lots of people selling in the market. Little red candles below that, more people selling in the market. The buyers try to get back into the market, but the sellers are stronger than the buyers. So the sellers are giving you a little bit of trouble here. Buyers will probably try and push this back up. They'll push it back up until they get these orders in this general area here, and then the sellers will take control again. Eventually, it'll get to your main support level. What does this tell you? There's lots of orders at this level that will get taken out, and it'll push the price back up again. This product is now ranging between the 81 and the 70 level. That's as simple as gets. How do you take a trade out of these levels? What you do is you wait for the green bar to confirm and close, and then you can take your long trade out of the support. Out of the resistance, you wait for the red bar to confirm and close, and then you take your trade short. In a case like this, where it comes back and takes money orders that are waiting here, you wait for the red candle to come back out of here, confirm and close, and you take the short trade down. That's how we trade with price action, support, and resistance. It's not complicated. I don't trade much with fair value gaps, but there is a video that I've made on it. If you want to go and have a look, you can see what it's all about. You get a fair value gap, you can see there's money lying there as well. But generally, I look for the supply and demand levels in between, and you can find that there as well. What you will find here is confluence with the trend. So for example, there's a trend going down here, and if you look at that, it's lying in this supply area, supply of money. If you look at approximately where that's going to come out, it's probably going to come out right onto this trend line here, which will be a fantastic sell coming back down. And a trend resistance is as good as a daily resistance or any resistance. So that's basically simply just using a couple of squiggly lines to work out where the buyers and sellers are in the market. Where are the pros putting their money? Where are the institutions putting their money? There's clearly a lot of money here because there's clearly a big red candle that's come down here. So there's a lot more money waiting here to be taken out. So when that price gets back up to there, that's a definite sell. And that's all you're looking for. Ooh, the gold price has definitely shot up on this chart and it's breaking out, and this is probably go long. This is another way you can look at a trade. This is bullish. So the bullish line goes up in trend. Then it ranges. That's a flag pattern. It sits in that range. It breaks the range. It will result to the upside and it keeps on going up. That's effectively how you trade with markets like that one. Let me see on this one. Might be it's actually in profit. I thought it was losing money. Okay, it's actually making money. All right, so that's charts. And now I'm going to let you in on the secret to trading. It's got nothing to do with these charts. Once you understand the secret to trading, that's when you figure out how to become profitable in the market. So you've looked at the charts, and now you have a system that you can use so that you can manage your risk, so that you can have an edge in the market, so that you can feel like you've got something that's going to help you to win. But the secret to trading has got nothing to do with those squiggly lines, and it's got nothing to do with that so-called system, that so-called win rate that you're supposed to be getting. The big question is, what's the secret? How do I go about becoming a profitable trader? How do I make money in the stock market? Here's the thing, guys. What you have to understand is it's all about a really simple business plan. And the simple business plan is as follows. And I'm going to give that to you because at the end of the day, it's all about how you approach the market. It's all about your psychology when you are trading. So you'll say to me, but Rob, what are you talking about? What psychology are you talking about? I mean, what do you mean by psychology? Well, it's as simple as this. When you trade, when you deal with money, when you gamble, when you trade, when you do anything with money, if you start a normal business, a shop, there's a thing called fear. Fear, that inbuilt fear of failing, the inbuilt fear of not being able to make money, the inbuilt fear of actually losing money, maybe losing your life savings, maybe it's everything you have in life. That can be the worst possible feeling that any person can have. And that fear will come out to haunt you when you're trying to make a profit in the stock market. If you take a trade and it goes into profit and it goes into a small profit and you got a target, you said when you took that profit, I'm going to make $2,000 on this trade. And what happens? It goes $300 into profit. And what happens to you? You click out of it, you take the $300 and run because a profit's a profit, right? No, that's the problem, guys. So you're sitting with a whole bunch of little profits and you're telling all your friends you've got this immense win rate and you're such a fantastic trader, and you're going to take that one loss that's going to destroy you. And I know you are, because if you're taking your wins like that, you know what you're doing with your losses. You're adding to your losses. When you start taking a loss, I bet that you're going to double up on that loss so that you can get back and break in because you want to get out. You don't want to take any loss whatsoever because that little voice in your head, that fear is telling you, whatever you do, don't take a loss. Don't take any loss whatsoever. So when it goes down, when it starts going down, you double up and you think, well, it'll come back and then I'll get out at a break even and I'll even maybe make a profit. But then it carries on going even further. So you think, well, I've got enough money, I'll just double up again and then we'll get out when it goes back up. And the damn thing doesn't go back up and it keeps going down. Now there's a limit to every single trader's fear, or let's say that shell that you've got around you, that ability to hold on, right? There's a limit to that. There's a point where you say, I'm just losing too much here. And before I lose everything, I've got to get out. And you know what happens the moment you get out? The moment you get out, it goes the other way. And that's even the worst feeling on earth. The worst feeling on earth is when you eventually got out of the trade because it was killing you and it goes in your favor anyway, or where it would have gone back. And that is even worse than just losing the money. So what I always advise people is just take the stop loss, take the loss, and walk away. But that's not the secret, guys. That's just a part of it. That's just a part that you need to understand. You don't add to your losses. You don't hedge your losses. You walk away from your losses and you take as small losses as you possibly can. What you're doing with your losses, you should be doing with your wins. In other words, you should be adding to the wins. You should be averaging the wins up, or at least making more on your wins than you are on your losses. The secret is this. What you got to do is say to yourself, I'm prepared on a $100,000 account to lose $1,000 on every single trade I take. The secret is to say, I'm paying $1,000 for this trade. That's it. That's where it ends. So you look at the trade and you say, well, that's $1,000. I'll pay the $1,000 and it's gone. If it goes to that amount, then it's lost. It's over. I've paid for the trade. Now, the point is this. If you take 10 trades at $1,000 risk each, the chances of you losing all 10 trades in all probability is 0. You might lose 5 and win 5, and that's the basis of the market. It's 50-50. In all probability, you should lose 5 and win 5. But the point is you paid $1,000 for each trade. Now, each trade costing you $1,000, the second part of the business plan is you want to make $2,000 on each trade, at least. You don't have to. You can have one-to-one trades. You can make $1,500. It doesn't matter. Just make more on the win than you do on the loss. But how do you do that? How is that even possible? Now, remember, we trade on a lower time. We trade on the higher time frames. We don't trade on 5 minutes. We don't trade on 15 minutes and try and beat the markets, which you can't. We trade on 4-hour or 1-hour time frames, giving us, or even a day, which gives us a more reliable setup in the market, a more reliable situation. We know where the markets are going. We know the markets are going in that direction based on historical values, because that's how we trade. We trade based on historical values in the market, historical prices. So we look at what it's done before and we figure out what it's going to do next. Now, the point of this is as follows. When you go into profit, so let's say you go $800, $900 into profit, and you're just dying to take that profit. What you do is you take your stop loss, your invalidation point, and you move it to 0, or you move it to $200 or $300 in profit. What you're doing then is you're actually saying, wow, my trade is now in profit. I've now taken my trade up into profit, my stop loss up into profit. So this trade is now completely free. It's not going to cost me a cent. It's absolutely, completely, totally free. And if the stop loss comes back and takes it out, then effectively I'm going to be sitting either with a break even or a profit. So that trade has cost me nothing. But if the trade does go in my favor and goes where I expected it to go based on my historical values and historical research, then I'm going to make double what I would have lost on that trade. Now, if I told you I'm going to flip a coin for you and 5 times you're going to lose 1 coin and 5 times you're going to win, but I'm going to give you 2 coins for every win, you would take that trade all day long. And that's the basis of your trades in the market. The basis of your trades is lose less, win more. That's the secret, guys. That's how you make money in the markets. Not with the squiggly lines, not with systems. Everybody's got a system that's going to win. Everybody's got an edge. Everybody walks around saying, my system's better than yours. The stock market, the Forex market, the trading market is made up of the following. It's made up of buyers and it's made up of sellers. And guess what? Every single one of those buyers and sellers wants to win. Do you know anybody that gets into the stock market because they want to lose? No, you don't. There aren't anybody. There is nobody like that. I don't know anybody like that. As far as I'm concerned, absolutely every single person that I know gets into the stock market because they believe they got an edge, because they believe they got a system that's going to win, and because they believe they're going to win in the stock market. So if you think that you're going to take on pros that have been around for a really long time, that you're going to come into the market and just wipe them out, you got another thing coming. Understand the simple secret to trading. That is, make more on your wins, lose less on your losses. Follow my principles, go through all my videos and see how we do it. You'll see, you'll become a profitable trader. If not now, over time, you'll learn it, because you have to understand this is not an overnight game. The stock market is not an ATM. Money is not going to fall out the sky, guys. This is something you have to work at. You have to learn. And the reason you have to learn is you have to get your head around it. You have to get your psychology around it. And you have to get over that fear, the fear of trading. Because when you put real money down, it becomes a completely different picture to just the theory. Anyone can teach you the theory. You can go on any course. You can go to any classroom. You can pay whatever amount of money for any course you want. And you can come out of there feeling extremely positive, thinking, I know how to do that. I'm an absolute genius. But when you apply real money to it, you're all on your own. Just remember, you're all on your own. You're not sitting at a trading desk with all these other traders. You're sitting by yourself, all by yourself. And you have to make that decision to push that button with your real money, with your own money. You have to push that button. Can you push the button? Can you do it? And can you make the trades? And can you hold the trades? And can you make the profits? That's the basis of trading. So let's see how you get on. And I'm here to help you guys. Don't forget to come back and watch the live shows. It's the weekend coming up. So I'll tell you what, let's do the following. Come back tomorrow, watch the weekend show where I go over the ups and the downs of the market and where we're going and where we're not going. Come back on Monday, watch Monday's video, and then come back for the live show on Tuesday and understand the secrets of the market. I think the live show on Tuesday will actually go over this again, just to reiterate what it's all about, because I keep putting it out there and I'm hoping that you guys will understand it. I get a lot of questions on stop loss. It's so important that you understand that it's an invalidation more than a stop loss. Thanks for watching, guys. Don't forget to watch the other videos. Don't forget to watch the last videos, and have a fantastic day further. Guys, thank you for watching the video. Don't forget to subscribe. Cheers, ciao, and bye.